Hey everyone, today I'm doing a deep dive through the reports in TradeChainly. I'll show you what each report measures, how I read the charts, and the practical ways I use the insights to actually improve my trading. Every trade we take leaves a fingerprint. Reports turn those fingerprints into patterns. If you don't measure, you're guessing. These reports let me stop guessing. Let's start with the overview report. This is the snapshot of your trading performance. Here we have the full metric panel, everything from total P&L to number of streaks. Trade expectancy shows me whether my strategy actually has a positive edge. The average winner versus loser shows my exit discipline. My largest loss tells me whether I'm respecting risk management. The streaks reveal whether you tilt or whether you stay consistent through down periods. All these together give me a psychological fingerprint of how I behave in the market. Below the stats, we have the two main charts, the daily net cumulative P and L chart. That is the shape of your entire journey. If the line is smooth, it means your process is stable. If it's choppy, the market is telling me that my strategy timing or emotional control might be inconsistent. On the right is the net daily P and L chart, every single trading day visualized. I can check in depth any of my trading days. I can see my full intraday cumulative P and L curve. I can check the full list of trades closed that day and the metrics for them, my profit factor or the achieved P and L. It's everything I need to understand how my day actually unfolded. Going back, we have these four performance metrics. The profit factor shows how much I make for every dollar I lose. Here, I have the trade win percentage distribution. Average win-loss shows me if I cut losses fast and hold winners long. Day win percentage shows consistency, how often I close the day profitable. I can narrow down the data shown. Let's analyze the month July. Now the entire overview reshapes. The charts and stats are recalculated. It becomes a micro snapshot of that month only. Let's narrow it even further. Only long trades that are winning. I can drill down and analyze every aspect of my trading journey. This is why I always start here. The overview tells me where the edge is real, where I'm bleeding, and what I need to investigate deeper in the next reports. Once I have the big picture, I want to know when I'm performing best. That brings me to the hourly report. This shows when you actually trade well. You get two charts, trade distribution and P&L for the time interval. Together they reveal whether you're active at the right times. By default, it's grouped by hour, but you can switch to 30, 15, or even 5-minute intervals. When I'm scalping, I can zoom in to find precise windows where setups hit. When I swing trade, I can stay wide. I can also switch between exit time and entry time. Exit time by default shows when trades finish, which exposes when you tend to secure profits or take losses. Entry time shows when trades start, revealing whether your timing aligns with strong or weak hours. Comparing both often exposes mismatches between good entries and bad exits. On the right, you have your best hour and worst hour, each with profit factor, total profit, and total loss. This instantly highlights your best session of the day and the danger zone you should avoid or adjust. Below is the hourly summary. For each hour, you can spot real patterns. Overtrading windows, hours with strong win percentage but weak RR, or a single hour that drags the entire day down. For example, I noticed my P&L from 1 a.m. to 6 a.m. is consistently low. That tells me one of two things. I'm trading the wrong setups at that time, or my edge doesn't work in low liquidity hours. Actionable tweak I could do is reduce exposure during those hours, or only trade higher confidence setups. The hourly report is essentially your trading clock. It shows exactly when your edge is alive and when it disappears. Zooming out from hours to days, this shows how you behave throughout the week. It highlights which days you trade most and which days actually pay you. For example, weekends might consistently show negative P and L, which is common for momentum traders because liquidity dries out. If weekends underperform, I cut size or avoid opening new positions on those days. On the negative days, I can check my win percentage and average P&L for those days. And if we go even further out, we can see how performance stacks month by month. Seasonality pops up quickly. Maybe March to June are weak, while July to September produce most of your gains. If a month is strong, check which setups, symbols, and durations dominated that period and replicate that month's setup. Now let's check how long we hold our trades. The trade duration report tells you which holding times work. If trades held 24 hours or more are negative, but 2 to 4 hours are highly profitable, that's huge. It means your edge is intraday, so you should prefer intraday rules and avoid impulsive overnight holds. I should rework stop target rules or add a rule to close positions before crossing into the losing duration bucket. I can see my profit factor for each duration time. I can see I dominate in the 1 to 2 hour hold time, which helps me narrow down my strength. Let's see our entry price report. This shows whether you perform better on low-price symbols or large-cap coins. Maybe you're consistently profitable on 1 cent to 99-cent altcoins, but not on Bitcoin-level trades. I use it to find my range. Next up, volume report. How does the volume of your trades affect results? If tiny sizes show big win rates, maybe you're good at scalping micro moves. If very large volume trades show big losses, that's a red flag about sizing or liquidity. Action I could take is cap position size where P and L per dollar is weak. I can see my best performing volume is 10,000 and above with total profit of $4,000. Alright, now let's see which symbols are really pulling the weight in your portfolio. This is a map of where your profits actually come from. Maybe Solana makes up a small portion of your trades but contributes most of the P&L. Or Ethereum trades are numerous but less profitable. Use it to prune your list. Trade more of what works, less of what doesn't. By default, this shows me the 20 top performing symbols. But if I check my worst performing ones, I can see trading Bitcoin is my weakest point. I should avoid or adjust my strategy for it. Once you know your best symbols, the next question is, how well are you managing risk versus reward? This tracks how your risk to reward outcomes distribute. If many trades are none because you didn't set stops or targets, that's a discipline problem. If a large share of P and L comes from positive 3R and more trades, it suggests you need to let winners run or size for occasional big wins. Action I could take is enforce stop-target discipline and consider position sizing to capture more positive R multiples. In the table, I can check how many trades I've traded without stop loss or profit target and the consequence of it. Now let's look at position sizing itself. Are bigger trades helping or hurting? This tells you whether your P and L scales with size. If small position sizes are profitable but large sizes blow up, liquidity or psychological scaling could be the issue. Keep your size where your performance is stable. Next, one of my favorite parts, breaking trades down by tags to see what setups or mistakes drive results. The setup report breaks your trades down by strategic intent. If breakout trades lead the P&L and reversal trades underperform, that's direct strategy selection. Look for consistency. Setups with strong expectancy and low loss streaks should become your core playbook. Now the opposite side, mistakes report almost always shows clear negative buckets. If over-leveraged trades cluster in deep red territory or have the worst total loss, that's the habit to eliminate first. While FOMO mistakes are plenty, I can see they don't damage me too much. I have small losses from them, so maybe I shouldn't worry too much about that mistake and concentrate on the more damaging emotions. With the wins-losses report, it separates the winners from the losers and compares them side by side. This splits the story. Compare average hold times between winners and losers. Winners might be held longer. Compare the winning and losing streaks. Maybe losers have small losses but longer streaks. Often you'll find a small number of winners drive most profit. Protect them. I sometimes change the report P&L calculation to be gross. It might show me how trades without fees impact my psychology. And finally, let's take comparison one step further. Head-to-head testing of any two groups of trades. This is my favorite for hypothesis testing. You can create 2 groups using 12 filters. Let's compare scalping long trades versus breakout long trade. If the breakout group has higher net P and L, fewer trades, and better expectancy, that tells you which strategy is more efficient for your capital. If the numbers confirm, adjust allocation or rules accordingly. We can check another hypothesis. Group 1 can be intraday trades on symbols priced under 50 cents. Group 2 can be intraday trades on symbols priced above $50. This comparison tells me whether my intraday edge works better in fast-moving, low-priced altcoins or in slower, high-liquidity majors like Bitcoin and Ethereum. If the under 50-cent group has higher win percentage, stronger profit factor, and a cleaner daily equity curve, that means my execution thrives in small-tick, high-volatility environments. If the $50-plus group performs better, that means majors are giving me more stable, consistent intraday setups. That's the tour. Reports won't trade for you, but they will tell you where you're leaking edge and where your edge is real. Thanks for watching. Trade smart, log everything, and let the data do the coaching. Journal your trading journey and try TradeChainly today.